Okay, let's just dive right in because something huge has just happened in the world of finance. We're talking gold absolutely smashing records with silver right on its tail. But listen, the real story here isn't just the price. No, it's way bigger than that. It's about a massive, fundamental shift in who holds the power.
And I mean it when I say massive. Because for the first time, ever really, a critical tipping point has just been crossed. This is a big deal. It signals a major move away from the financial system we've all known for like the last half century.
And this chart right here, this tells the whole story. Look at this. The total value of gold that central banks are holding has now officially blown past the value of the US Treasuries they own. I mean, let that sink in. This isn't just a small change. It's a seismic event. It means governments, the world over, are literally valuing physical, tangible gold more than they value the debt of the world's go-to reserve currency.
So the big question is, what on earth is going on? Well, you'll hear analysts throwing around this term, the golden renaissance. And you've got to understand, this isn't just another market rally. It's a deep, structural shift in the financial world. And it's dragging in a level of pure chaos we haven't really seen since the 1980s.
When you boil it all down, what this really is a giant vote of no confidence in the whole fiat currency system. For decades, the entire global economy has been running on faith. Faith in money that's just printed by governments, with the US dollar sitting right at the top of the pyramid. This huge pivot to gold, it shows that faith is starting to seriously crack.
And all this shifting and cracking is creating absolute chaos, especially over in the silver market. It's like what Ole Hansen from Saxo Bank said here. Volatility is just feeding on itself. It's creating this really dangerous loop where just when you need buyers and sellers the most, they just disappear.
And just to give you some perspective on how crazy this is, you literally have to go all the way back to 1980 to see price swings this wild in the silver market. We're talking about the price dropping 10%, then snapping right back up 7% in a single day. That's not a healthy market. That's a market in serious distress.
Okay, so what's the driver here? Why are all these central banks, all around the globe, making this huge coordinated move into gold now?
Well, the big long-term trend has a name: de-dollarization. Basically, you've got a lot of emerging markets looking at how the US dollar can be used as a weapon, through sanctions. And they're thinking, we need to protect ourselves. And what's the most obvious, time-tested alternative? Gold.
Now, that's been bubbling under the surface for a while. But recently, a kind of perfect storm hit and just supercharged the whole thing. You had trade wars firing back up, a nominee for Fed chair who many thought would be too political, and then a whole bunch of geopolitical hotspots flaring up. It all just accelerated this mad dash for safety. And this right here is a really key idea to grasp: counterparty risk. Think about it. In a world full of sanctions and instability, if you hold another country's government bonds, there's always a risk they just won't pay you back. But gold is different. It's a physical thing you hold in your hand. It can't default. A government can't just print more of it and devalue what you have. It's pretty much the ultimate safe haven when the world feels anything but safe.
And the scale of this whole pivot, it's just staggering. I mean, get this. In January of 2026 alone, the People's Bank of China reportedly snapped up over $100 billion worth of gold in 1 month. That's not just, rebalancing a portfolio. That's a massive signal that they believe a major shift in the global financial system is coming, and they're getting ready for it.
And hey, it's not just China, not by a long shot. We're seeing really aggressive buying from countries all over the map: Poland, Brazil, Kazakhstan, you name it. And listen, when you see central banks, who are usually pretty conservative, all start moving in lockstep like this, that sends a powerful message. It tells you they share a belief about where the world is headed.
All right, so when you have a financial earthquake this big, it's going to create some clear winners and losers all across the economy. So let's take a look at some of those ripple effects. So, in the winner circle, you've got the miners and the streamers. Think about companies like wheat and precious metals. They locked in their costs years ago, so now, with prices this high, their profit margins are just exploding. But on the flip side, you've got the losers, industries that absolutely need silver, like solar panels and electric vehicles. They're getting hit with a brutal margin squeeze. And don't forget the traditional banks. Their whole business model is built on those government bonds that are now being shunned. This is a fundamental challenge to how they operate.
This whole reevaluation of what has value is happening everywhere, and it's leading to some pretty surprising changes in how governments are thinking about money, which brings me to a kind of weird question for you.
What do gold and onions have in common? The answer is pretty wild, and it perfectly shows just how deep this shift really goes. Believe it or not, in India, the central bank has started officially tracking gold and silver right alongside essential stuff like onions to monitor inflation. I mean, wow, that tells you everything. Precious metals are now being treated as official, institutional indicators of the economy's health.
So that really brings us to the core debate here. Is this a permanent structural change to the entire monetary system, or is this just another massive speculative bubble that's going to pop?
I mean, look at the arguments. The bull case is really strong, right? You've got this unprecedented buying from central banks, de-dollarization is speeding up, and people are paying huge premiums just to get their hands on physical metal. But then you look at the bear case, and it's also pretty compelling. The price has gone up so fast, so quick, that the charts are screaming overextended. We've seen Chinese demand suddenly dry up, and you've even got big players like JP Morgan saying, hey, maybe Bitcoin is the better long-term bet here.
Okay, so you've got these two really powerful stories clashing with each other. So what happens next? What should we all be watching for as we try to navigate this totally new era for finance?
Well, there are three big things to keep an eye on. First, get used to the chaos. This wild volatility is probably the new normal for a while, as the market tries to figure out a new, stable price. Second, watch for innovation. You can bet that industries are going to be racing to find substitutes for silver now that it's so expensive. And third, and maybe most importantly, all eyes are on the Fed. What the new chair does with the dollar, well, it could either calm this whole storm down or it could just pour gasoline on the fire.
Okay, so let's wrap this up with the three big takeaways. Number one, we are living through a truly historic financial shift. Central bank gold now officially outweighs their U.S. Treasury holdings. That's a fact. Number two, this shift has unleashed extreme volatility, the wildest we've seen since 1980. And number three, the impact is everywhere. It's squeezing entire industries, challenging the big banks, and literally changing how governments track the health of their own economies.
And all of that leaves us right back where we started with that one critical question. Are we watching the very beginning of a new monetary era, one that's built on hard assets instead of just trust? Or are we just sitting at the very peak of a massive speculative mania that's about to come crashing down? Whichever it is, the answer is going to define the financial world for all of us for years to come.